All right, let's turn our attention now to some news yesterday out of the Federal Reserve. Latest stress test results out, and we see announcements from banks on their capital return plans. Yahoo Finance's Brian Chung joins us now for the latest on that. And Brian, we've seen a lot of preference for income from investors over the last several years, certainly with yields this low. And I guess congrats to the financials on now getting into this mix.
Yeah, well, we have to rewind to last week's announcement on Thursday from the Federal Reserve that the largest banks had gotten a clear bill of health from the regulator regarding their capital positions. The Fed does this normal stress test every year, but of course, last year was a very unusual year with the pandemic, and the Federal Reserve at the time last year had put restrictions on the amount of dividends and share buybacks that the banks could execute because of the concern over whether or not the banks were able to absorb the shock that was the COVID crisis. Now, the Federal Reserve said that as a result of the clean bill of health, everyone passing the stress test, that it would be taking off those training wheels and that the banks would not have those additional restrictions on dividends and buybacks as of this Thursday, which means floodgates are open. And we saw a number of large banks announce after the market closed yesterday that they'd be paying out more dividends and also executing more share buybacks. The four banks that you see ahead of you announced an extra $2 billion in dividends next quarter because, again, they were no longer restricted from not being able to raise their dividends. And when you take a look at a bank-by-bank breakdown, you can see there were some banks that got more aggressive about the amount that they're paying out. When you take a look at Wells Fargo, for example, they doubled their dividend from 10 cents to 20 cents. So did Morgan Stanley, doubling from 35 cents to 70 cents. Of course, you want to pay attention to the largest bank in the United States, JP Morgan Chase, raising their dividend from 90 cents to $1. So it doesn't matter what bank you're looking at specifically. Yes, some may have paid out more than the others, but if you are a large bank shareholder right now, you're probably feeling pretty good about the increase in capital now that the Federal Reserve has taken off those training wheels. And again, worth noting that a lot of the people watching this space, like Gerard Cassidy over at RBC, a friend of Yahoo Finance Programming, saying that any excess capital that cannot be redeployed into the growing companies, kind of whatever they want to grow their balance sheet for or extending into new types of business lines, either organically or through acquisition, will ultimately end up back into the hands of shareholders, which means that, guys, it's not just this coming quarter, it might be coming quarters and also years as well of increased capital distribution.
Brian, real quickly, Morgan Stanley doubled its dividend. It's the third trending ticker on our site. Any sense on why they raised their dividend the most?
Not necessarily, but you can kind of glean through the just the press releases and everything that the companies that were able to really do well off of their trading income during the last year were the ones that were able to have enough profits through a very rough and obviously flat yield curve year of 2020 to have the type of position to be able to pay out that capital back to shareholders. So you take a look at Morgan Stanley, you take a look at Goldman Sachs. Goldman Sachs, by the way, they didn't double their dividend like Morgan Stanley and Wells Fargo did, but going from $1.25 to $2 is no small change at all. And I think that that lends itself a lot to the way that their trading desk performed, not just in fixed income, but on currencies, also on equities. Those two banks specifically doing extremely well through the crisis. Now, of course, the question is whether or not, with the volatility not as high as it was in the depths of the pandemic, whether or not that can continue. It seems like as the yield curve maybe steepens a little bit more, some of those more commercial bank and kind of community banking related businesses just loan pipelines, lending out, and then taking deposits that might end up being the winners in the coming quarters. But at least for right now, that might be the reason why Morgan Stanley and Goldman Sachs were able to pay out so much.
All right, Yahoo Finance's Brian Chung with the latest windfall heading towards financial investors over the coming quarters. Brian, thanks for that update.